Hello everyone, good morning. We're going to take a look at the multi-step income statement we kind of talked about yesterday. So after watching the video and then looking at the problem, what I do on these problems, and so when you get to college and you take this problem on exam, what I do is I go through each line. I decide, is it at the top of the multi-step income statement? Is it classified under SG&A, selling, general, and admin expenses? And then is it other? Is it an other type of income, gain, or loss? Or is it not on? Sometimes the professor will put something on there that's on the balance sheet to confuse you, and that's what this problem did too. So the first thing I do before I even start making the financial statement, I just go through and I classify, is it the top, is it part of SG&A, or is it other? So the first one here is selling expenses, so that one's pretty obvious because selling, general, and admin expenses, so that's going to appear in the SG&A portion. So what I do then is I just kind of label each one. Sales, that's at the top of the income statement, and so we have sales, COGS, sales discounts, all that stuff I consider the top. So anything above the gross margin, I just say, hey, that's at the top of the income statement. So that's what I want to label as such. So that would be at the top. All right, merchandise inventory. Where do you guys think? Where does that go? That is a balance sheet. So that does not go on the income statement. So be careful. Don't put balance sheet items on the income statement. That's a Module 3 rookie error. Administrative expenses. So selling, general, and admin expenses, that is SG&A. That one was pretty simple. It's given you the name and the account. Sales discounts. So that would be up at the top. Now, in real life, we put the carrying value of sales on the income statement for teaching purposes in these problems. When we have a sales discount, we're going to put that on the statement just so, as a learner, you know that that's where we go. But in real life, corporations don't put sales discounts, sales returns. They don't want the users of the financial statements to know that maybe they have a lot of returns and they're making junky products. They don't want the public to kind of know that, and they don't have to disclose that. If there's like a huge recall, obviously the world knows that they did something wrong, and so they will put that in the notes of the financial statement saying that we had a huge recall. One of the most recent examples was the Volkswagen car that they kind of lied on their diesel engines on the emissions. They put something on there to make it read the emissions incorrectly, and so they had to recall just tons and tons of cars. Those cars are floating around everywhere right now. So they would probably disclose that, but they won't have sales returns on the financial statement. The next one is dividend income. So that is other gains and losses. So when you have dividend income, it's not a part of operations, so that would go under the other section of the multi-step income statement. Then you have cost of goods sold. That is would be at the top of the financial statement. So you have sales minus COGS, so that would be at top. Depreciation expense, that's an SG&A, selling, general, and admin expense. So when you have depreciation, that goes under SG&A. Notes payable, here we go again. Another curveball. It's like a curveball changeup. I don't know if that's even a pitch. Notes payable, that's a liability that is not on the income statement. That's a balance sheet item. Loss due to fire damage, that's an other gain and loss for the business. So that would be under the other section. And then interest expense is also an other. So once you kind of label those, now you're ready to jump into the actual making of the financial statement. It's important that when you go and make your financial statements, as always for Module 3, we always want to give the heading, the name of the company, we're telling the user what financial statement they're looking at, and then the period of time. So an income statement is a period of time. Balance sheet is point in time. So this is telling the user that this is for the year ending. So these numbers represent all the income statement items for the entire year. All right, so now we're going to take the labels that we had. I'm going to kind of do it side by side here. All right, so once I have the heading on there, I'm going to start plugging in. So I'm going to grab the items that go at the top of the financial statement. We kind of labeled that here. Let me just kind of pull this over just a little bit more. There we go. Okay, so sales is at the top. Obviously, that when you hear top line growth and you watch the business news and they're like top line growth was blah 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 or 5%. What they're talking about is the sales figure. So companies are always trying to grow their sales figures, and so every quarter when they release their financial statements, they then give forward guidance and they say how much they think their sales is going to grow for the upcoming quarter. And so that on that earnings call that happens every quarter, the investors then will react to how they did for the quarter and along with forward guidance. So whenever you hear top line growth is up or top line growth is down, they're talking about that sales figure. Okay? So now what we do is we grab all the things that we labeled as the top of the multi-step income statement. So we have sales discounts, and we have cost of goods sold. So we're just going to plug those in. There's sales. We're going to take out less sales discounts. We have net sales of $1,825,000. We take out our COGS number, and that takes us down to the gross margin. So there's kind of the summary for that. And then our operating expenses, we're going to kind of clump together here. And that's why we have kind of two columns here. When you look at financial statements on the SEC, they just kind of do one big column. So don't get too confused by this. It's just saying, hey, your operating expenses are these three. So here's each three individually, and then there's the subtotal. All right. If we pull up like Apple and look at their 10K and their income statement, they're just going to say SG&A, and it's just going to have one number there. It's going to just have this. But what we're learning as accounting students is we're looking at, well, what accounts make up SG&A? So once we have our margin, we take out our SG&A, and I know some of you guys were incubator students, and you did this in incubator class where you had your margin, and then you took out your SG&A. So there's our SG&A right there, and then we have our income from our operations. All right, so this company made $230,300, and so the reason why a multi-step income statement does this is we want to look at our operations does the profitability of our operations go up? Does it go down over time? How do we do versus last quarter of last year? How are we doing from a fiscal year standpoint? So here the company made $230,000, and so now we're gonna adjust and do all the other things that occurred. So we have other revenues and gains, and so in this case you're going to go to your others and you're going to plug those in. There we have $11,000 in dividend income. Other expenses and losses. So we had interest expense and fire damage, and we have that total there. And then that works its way down to income tax expense. And so we want to plug that in at the bottom there, and we calculated that because the problem gave us the tax. So the tax is based off the continuing operations before income taxes. So what I taught you in the beginning of the year, I don't know if you remember this, we had sales, COGS, gross margin, operating expenses, and then we worked our way down to EBIT, earnings before interest and taxes. Then we had earnings before taxes. So really this 217, it's earnings before taxes. We're now in module 8, so we're calling it something bigger because we're smarter and we know a lot more now. So now that's our income from continuing operations, because up here we have our income from just operations, and this is labeled as continuing operations. So sometimes we have things that occur during the business. Now this problem, yesterday I talked about discontinued items. Discontinued items are not on this financial statement, but they would come in down here. But this problem doesn't give it to you, so we won't worry about it at this point in time. So now we take out our tax. Our tax is based off of the 217.4, and we multiply that by the tax rate. And I believe the tax rate, what was the tax rate on this problem? The tax rate is 35%. So you take the $217,400 multiplied by 35%, you get the $76,090, and that takes you down to income from continuing operations at $141,310. All right, so that is how you kind of do these problems. And so if you were walking into class and we're taking an exam, when you get to this problem, you just practice this a bunch of times. You just go through, you label, and then you get plugging in. Where it's hard in the beginning is this, okay, what's the verbiage am I using? So there's some new verbiage. So if we kind of review here, our new verbiage is income from operations. We kind of didn't call it that before. We just called it EBIT, but now it's income from continuing operations. We take out all of our others. We talked about that in Module 6. When we bought and sold assets at gains and losses, those gains and losses go in here. Interest expense, dividend income. So all those other pieces go in here. Then we take out our taxes and we get income from continuing operations. So there, folks, is your multi-step income statement, Kemp Inc. All right, I will leave you with a couple problems to practice today, and just follow the directions in Schoology. Thank you.